we're talking about the topics. I have moved on to the module B right now. So we are talking about the area of cash flow statement and fund flow statement. Okay, so let's talk about the details there. Cash flow and fund flow. Cash flow is different from that of fund flow. Cash flow talks about only and only inflow and outflow of exclusively cash. The rest, it is not dealing with anything else. While fund flow deals with all kinds of sources of funds as well as application. One is source and the other part is application. Okay? So this is a broader statement. If we talk about cash flow is also covered under Accounting Standard 3 and IND AS 7. Right? In cash flow statement, they have three kinds of activities: operating, investing, and the last one is financing. The one that relates to our business is called operating. The one that relates to our assets is called investing. And the one that relates to the area of arrangement of funds for the business, that is called financing. Here comes the question. Net profit for the year rupees 15,000. Interest received in advance on 1st Jan 2004 rupees 2,000. 31st of December 3,000. Cash from operations will be. Okay, my net profit is 15,000 rupees. Okay, interest received in advance on 1st of January 2004. This is the advance that I've received. Okay, this is advance received. This one is our opening advances, right? So this was opening advance of 2,000 and we have a closing advance of 3,000 rupees. So what should be the amount of cash flow as per the operations? In this case, there is only one thing. The amount that we received this year should be recorded as the money that we are that is a part of inflow of cash, है ना? So only what we are receiving this time is to be treated as inflow. Rest the thing would be an outflow of cash, right? So in this case, if I look at the question, it's gonna be 15,000 plus 3,000 minus 2,000. Because this year I've received 3,000 and 2,000 belongs to our profit from the previous years. So in this case, it's going to be 15,000 plus 3 minus 2. That gives us 16,000 all in all total, the amount which can be said to be the cash flow from our operations, or I can say from my business. This is the amount of money that I am making. Okay, so the correct answer is 16,000. So in this case, the correct answer is A. So you can see, if I look at the particular question there, we would be doing it like net profit is equal to, and then plus closing. This was advance now. Closing advances minus opening advances. Because I am just trying to find what is the amount that I've received this year. We're not worried about incomes, we're not worried about expenses, we are worried about the fact that what is the amount that I've received this year. Next point. Which of the following transactions will not result into flow of cash? Deposit money into bank, withdrew cash from bank, sale of machinery, or converted 2 lakh shares into equity shares. Okay. If I have bank balance and I convert it into cash balance converted into bank balance, this is just the movement, or this is just a change, right? This is not exactly inflow. Money is not coming into our bank accounts or cash. No, none of these things is increasing. Both of them are covered under the term cash and cash equivalents. ठीक है ना? It would be called cash and cash equivalents. So this deposited money into bank is not going to result in flow of cash. Withdrew cash from bank is the same scenario. If bank is converted into cash and cash is converted into bank, this is not to be treated as flow of cash. Then sale of machinery of the book. Value of the book value 74,000 at a loss. So there I can see a movement there. If I convert some equity shares into some debentures, there is no movement of cash. One security converted into another will not really make a difference. What will make a difference is if I sell something of book value 74,000 at a loss. That means I still would have got 65,000 rupees in the business and I'm losing a machinery. So in this case, the correct answer would be inflow of cash is there in this case. Achha, can you identify whether it is operating, investing, financing? I'm making another question out of this. It can be converted into a case study format. A, B, C, and last can be it is resulting in increase or decrease of only cash and cash equivalent. Where would this be recorded? If you sell a machine and then you get something, you're selling a machinery, na? So you're losing a particular asset. When you're losing an asset, it would be called an investing activity. Okay? Purchase of an asset is minus or outflow of cash. Sale of an asset is plus inflow of cash. Okay? So now let's move on and talk about the next question. GSC Limited has purchased a machinery of rupees 10 lakhs, issuing a check of rupees 2 lakh 50 and 10% debentures of rupees 7 lakh 50. In the cash flow statement, the transaction will be shown as outflow under investing activity rupees 10 lakh, inflow under investing activity, financing activity in terms of receipt of money 7 lakh 50, outflow under investing activity rupees 2 lakh 50, right? And then we have inflow of cash as financing activity 7 lakh 50 or none of the above. GSC Limited has purchased they have purchased something. They have got a machinery worth rupees 10 lakhs, issuing a check. So how are the payments made? To bank 2.5 lakhs, debentures 7.5 lakhs. So if I look at this, if I am looking only at cash flow na, so that is only bank. If I'm supposed to make a payment of 10 lakh altogether, only 2.5 lakh is made in cash. Remaining is not made in cash na. So the entire portion will not be considered. In this case, the correct answer would be we are purchasing an asset indeed, and it would be considered as an outflow of cash. Okay? Outflow under investing activity. But we are not receiving any money. So I'll just consider it as outflow of investing activity, rupees 2 lakh 50. This 7 lakh 50, we are getting debentures, we are getting machinery and we are issuing debentures. In this case, there is no movement of cash at all. So in this case, outflow under investing activity will be 2,50,000 rupees. Done? Next question. Mention the net amount of source of cash when a fixed asset having a book value of 15,000 is sold for a loss. Acha everyone, this question is a little twisted. How is it? We purchased a source of cash when fixed assets, book value is 15,000, है ना? The value of it is 15,000 and we sold it at a loss of 5,000. Currently we have got 10,000 rupees, है ना? This 10,000 rupees is basically inflow. I am telling you that pata hai, there is something that I bought for 15,000 rupees, but I'm selling it at a loss because I just want to get rid of it right now. So I'm selling it at a loss of 5,000. After facing a loss of 5,000, I'm getting 10,000 rupees in my pocket. So this 10,000 would be inflow of cash. Okay? So this 10,000 is inflow of cash. Acha, again, this part is a part of investing activities. When you purchase a fixed asset or you sell a fixed asset. When you purchase a fixed asset, it's a negative. When you sell a fixed asset, it's a positive. Negative means this is outflow and this is inflow. Okay? Short-term, highly liquid investments which are readily convertible into known amount of cash and which are subjected to an insignificant risk of change in the value are called cash at bank, cash equivalents, non-current assets or intangible assets. These are highly liquid investments. They can be sold at any point of time and their amount even is considerably stable. There's not much risk involved in it. So this will be no cash at bank. This will not be non-current assets or intangible assets. This will be considered as cash and cash equivalents. Done. So in this case, the correct answer is cash equivalents. Next point, for the calculation of cash flow from operating activities, payments and receipts showing in profit and loss are converted into payments and receipts actually in cash by eliminating. Acha, what are they talking about? But in actual what happens is, there are certain people who say, Arey yaar, we'll pay now, but not right now. Arey yaar, we'll make the payment. It will take a little time. There might be a few people who will be like, we will be receiving the money from you. When are you paying? We'll be like, sir, we'll be paying you a little later. This also happens now. Both things happen. Sometimes we make delays. Sometimes the other person might be making a delay too. What to do about all those things? There is a particular hope that maybe after a little time I'll receive the money, but at not this point of time. So what will happen? So this is considered as what? Whatever your net profit is, you add back all the things which are non-cash or non-operating, because this will basically deviate from the true and fair view of the organization, है ना? Non-cash and non-operating expenses. Sorry, expenses would be added back and incomes which we have already considered would be cancelled out. That is non-cash and non-operating incomes. Done. So in this case, the correct answer would be non-cash revenue from revenue earned and non-cash expenses from expenses incurred. Basically, what we do is we find our total net profit and we add back all the non-cash expenses and non-operating expenses. This was earlier negative, now it would be positive. And non-cash and non-operating income. Done. Achha, this is the question that we did now, just now. Chale. Now let's look at the next question. For while preparing cash flow statement, non-cash items and non-operating incomes are not required to be adjusted under. So this is not required under direct method. There are two kinds of method under cash flow. One is direct method and the other one is indirect method. Direct method is required. It is given in the accounting standard, but this one is not used as SEBI has prescribed all the listed companies to exclusively use indirect method only. That is why the direct method is not something which is basically part of curriculum even. We were not, when I was studying at that point of time, they didn't cover the direct method because they said you are supposed to follow what SEBI has said. SEBI has asked us to follow indirect method. So everything was prepared and we were even made to practice only the indirect method, as this is the only method SEBI has prescribed. This is just like depreciation. Do you know, in terms of depreciation, the most suitable method is WDV. In certain cases, they allow SLM, but under SLM, there are many benefits which will not be available. So, every business is always prescribed to use only WDV method. Even once we'll move to the income tax now, you will understand that even in the income tax, they have defined the depreciation percentages even. That if you have this asset, this would be the defined depreciation on it. Okay? Which of the following is incorrect about the statement of cash flows? It provides information about the cash receipt and cash payment. It reconciles ending of cash balance as per the bank statement. It provides information about operating, investing, and financing. It explains the deviation from the earnings. What does it mean? It provides the information of cash and bank. Cash flow statement really doesn't. Reconciliation can also be a part of it. This is also true. If I'm looking forward to it, then I would go with B there only. B is basically a part. This is for bank. Reconciliation statement. ठीक है ना? Then this is for bank reconciliation statement. This is not a definition of accounting and financial. This is not a definition of cash flow statement there. Cash from operation is equal to net profit plus increase in current assets, decrease in current liabilities, operating profit, adjustment of current assets and current liabilities, or all of the above. Actually, now we could have gone for C if they would have given operating cash profit. Because they don't take up the cash profit, they take the operating cash. It should be in operating terms. Okay? And then we have net profit. Whatever our net profit would be, we would be, if there is an increase in current assets, we are buying more assets, we are losing money. Decrease in current assets plus, okay, increase in current liabilities, I'm getting more loan, more money. Decrease in current liabilities, I make the payment. So in this case, the correct answer would be decrease in current assets plus. So I think I'll go for B. This is the area which is called adjustment for working capital changes. Okay? So this is the correct answer. Okay. I hope you have started preparing for your JIB exam already and your preparation should be going on at full pace right now. But if you are still, if you were someone who was studying on your own, that means you were looking forward towards self-study, or you feel that your pace is not going as per your requirement. So what you can do is you can go on to our website and take up our courses there. Okay, let me take you there. You have to go on to our website, go on to the area of JIB and CIB. Just go on to the area of JIB CIB Mahapack. This is where you will find JIB Mahapack 2.0. This is called 2.0 because this covers bilingual English medium, both batches, ebooks, as well as the mock test papers. This thing was already there in the Mahapack. Now, this year we have introduced 10 plus hours of big marathon, mega marathons, then the practice paper, as well as one more thing has been added, that is doubt classes that we take on Saturdays. Okay, so that means we have covered the doubt session on Saturdays. So if you're looking forward to it, what you need to do is click on the area of JIB and CIB. Okay, then click on the area of buy now. Use the code PREP80 and you will get 81% discount along with double validity. And this is something which includes both JIP and CIP. That means you're paying less than 12,000 and getting a benefit for more than 24 months. Near about 24 months, not 12 plus 12. You're getting it for 2 long years and covering both the particular areas. You don't have to pay even a single penny after this, because in case you are thinking of giving the next attempt, not this attempt, then even you have the validity not only for JIB but also for CIB, right? As soon as you clear JIB down, then you move towards the CIB, then you don't have to buy another plan. At the same time, the revision batches are also a part of it already. That means you just have to pay it once. After that, you all have a particular benefit. That means you don't have to pay again, right? So if you're looking forward to it, then kindly check it out on our website or in our app for further details, and kindly go ahead and purchase it. And even the book of IE and FS, the physical book of IE and FS has been available now. Kindly hurry up, and if you're looking forward to our physical book, then you should order it as early as possible, as the lowest price is going on, and this offer will end soon as the copies are getting out. In terms of the purchase, we have been receiving good reviews, so there it will be sold out very soon, so you should look forward to it at the lowest price as early as possible. Thank you everyone. Bye bye.